explained Crypto.com's ongoing insolvency battle. With most eyeballs on FTX's rapid meltdown last week, fears of a Crypto.com insolvency are swirling on the periphery. Some observers fear that Crypto.com, or its Cronos blockchain system, could face similar struggles or financial shortfalls in the wake of the FTX collapse. The exchange spent exorbitant sums on marketing campaigns earlier this year, including the now infamous Fortune Favors the Brave commercial, and the naming rights for the LA Lakers basketball stadium. It also advertised nosebleedingly high interest rates for stakers of its Cronos token that earned a rebuttal by investigative and whistleblowing YouTuber CoffeeZilla. Nowadays, it's backtracking on some of its promises of high staking rewards and perks for locking up its native token, Cronos. Observers note that the collapse of FTX was mostly due to weaknesses in its native token, FTT. With Cronos already down 85% year to date, confidence in Crypto.com's Cronos is nearly declining to the crisis levels that affected FTT. Reneging on Cronos-linked interest rates may have been Crypto.com's first sign of trouble. An aggregated portfolio of on-chain assets by Nansen suggests that Crypto.com holds just over 30% Bitcoin, with the remainder an assortment of altcoins with dubious value, including large stashes of Shiba Inu and Chiliz. Crypto.com promises audited proof of reserves. The past week's bad news has forced Crypto.com to offer reassurance about its finances. On November 9th, Crypto.com promised to publish audited proof of reserves to dispel rumours of insolvency. CEO Chris Mazalik called the situation, quote, a critical moment for the entire industry in a tweet thread. On November 11th, Crypto.com published a blog post stating that it held nearly $3 billion in reserves, including 53,024 Bitcoin and 391,564 Ethereum. It also published its Bitcoin and Ether ERC20 cold wallet addresses, citing transparency. This disclosure is not an audit, however. The exchange expects to publish the fully audited proof of reserves in a few weeks. Analytics company Nansen.ai backed that initial analysis up by showing that Crypto.com's digital asset holdings are worth over $2.8 billion. Crypto.com's race to reassure customers. Disturbingly, on November 9th, Crypto.com suspended deposits and withdrawals of USD Coin and Tether on the Solana blockchain, citing recent industry events. Mazalik cited FTX as an important bridge and venue for Solana-based assets. Tether also went through a scary moment of nearly losing its peg to the US dollar around the same time. Like most digital asset markets, Solana had a rough week in the wake of FTX's collapse. Sol plummeted from a 7-day high of $38.55 on November 5th to $12.62 on November 9th. Alameda researches nearly $1.2 billion in unlocked Sol, locked Sol, and Sol collateral could have led to worries that it could dump its Sol and Solana-based tokens to save itself. Sam Bankman-Fried and other FTX investors have repeatedly expressed support for Solana. On Monday, November 14th, Mazalik conducted an Ask Me Anything interview, wherein he assured the public that withdrawals were working, save for 3 coins. 2 of them are linked to FTX. Quote, we will prove people wrong, he stated. And, quote, as a company we have one-to-one reserves and a very strong balance sheet. End quote. Mazalik further disclosed that Crypto.com's exposure to FTX was now less than $10 million, opposed to the previous $1 billion figure. Most of it has been recovered, the chief executive said. Quote, we do not lend to third parties, we do not take counterparty risk, we do not even own Tether, end quote. However, Mazalik also confirmed that 20% of Crypto.com's reserves are in Shiba Inu, because it reflects what customers bought. It's one-to-one, end quote. Whether or not Crypto.com will get caught up in a domino fall like FTX remains to be seen. However, it has taken some steps to allay criticism, including publishing some slices of information, promising to conduct an audit soon, and taking steps to protect itself from a potential meltdown in Solana-based assets like USD Coin and Tether. For more informed news, follow us on Twitter and Google News, or listen to our investigative podcast, Innovated Blockchain City.